Welcome back to EDS, and in this video we are going to discuss how you can write your own options contracts, sell premium upfront, and generate consistent returns year on year. So the first thing that we're going to do, as per usual, is pull up our watch list. So right now we've got the futures with options watch list open. We're just going to change that. We put on a futures position in the last video. So let's just go over to, say, just a tasty IVR watch list. So the first thing we want to do is we want to have a look at where we are in the option cycles. So if you go to the trade tab, we can see here we've got a list of all of the different expiration dates. So personally, I only like to trade the monthlies. I never trade the weeklies. Weeklies are denoted by the orange W here. So the next available monthly would be September 20th, which is 23 days away, and then the one after that would be October 18th. So for me, 23 days is not enough time. I like to be at about 45 days when it comes to just straight equities. So we're going to go to the October 18th expiration date instead. The whole point of looking at the options chain at this stage is so we can see how far out we're going to go. So we've decided that we're going to be going about 51 days out. So we go back to our watch list, and what I like to do is fill all that have earnings within that range that we just found. So 51 days, go to our watch list, and we want to filter out everything that has earnings within the next 51 days. So what we're left with now is a list of securities that do not have earnings within the next 51 days, which is perfect for us. Earnings can cause problems for what we're going to be doing. So now what we want to do is we want to order the list. We want to rank everything from high to low based on the IV rank. So we now want to just go through the list and have a look at everything one by one. So we've got Weyerhaeuser. We're not going to put a position on that. There isn't enough liquidity. We've got Southwest Airlines. We have actually already got a position on Southwest Airlines, so we're not going to put on another position there. However, Southwest Airlines is a nice security. We've got News Corp. We're not going to put a position on there. There's not really much liquidity. Corning, again, same thing there. We're not going to put a position on. T-Mobile, I guess we could maybe have a look at T-Mobile. mRNA, as you can see here, everything is over 50. Anything with an IV rank of above 50 is generally considered to have a high IV rank. However, due to recent market conditions, anything over 30 can be considered as high, but we're just going to stick to the highest IV rank possible. So we've got Cadence Design Systems, we've got NI Source, HST, VST. With Tasty Trade, we do have this excellent metric here, this liquidity indicator. Generally speaking, I only like to go with things that are 5-star. However, if you don't have the liquidity column in your broker, what you can do is simply just go onto the trade tab, pull up the options chain, and you can simply have a look at the spread. You can have a look at the volume. Here you can have a look at the spread. The wider the spread, the less liquid it is. So yeah, so if you don't have the liquidity column, you can just work it out manually, but we're just going to be working based off this liquidity column. So in fact, what we can also do is just remove anything that doesn't have the liquidity that we're looking for, which is 4 stars. So as we can see here, we've got LUV, Intel, AMD, and Chipotle. These are the top 4, and we have positions on all 4. So yeah, that should tell you something. NRG, we can have a look at NRG. We've got an IV rank of 46.4. Let's have a look at NRG. Let's go to the 51-day mark, October 18th. So this orange bar here is the expected move within the next 51 days. So what we want to do is we want to have a look at the delta column. I personally like to be somewhere between 16 and 20 deltas. So 18 is perfect. The spread is not the best, but it's not too wide either. We'll still mock up a little position on it though, and then we've got a 9 or a 20 delta on this side. We'll just go to the 20 delta. So we've got an 18 and 20 delta with a net delta of just under 2. It is going to require $830 in buying power. However, we will collect $230 up front. We've got a 70% chance of probability of profit, and we've got 83% chance of the position hitting 50% of max profit at some point between now and the next 51 days. So if we just have a look at NRG for a second, so we've got our short strikes at 75 and 95. So if we just have a look and see what that looks like on here, so we've got 75, which is about there, and then we've also got 95, which is there. So as you can see here, we are smack bang in the middle of the range, which is perfect. Everything has been kind of moving sideways recently. If we look at where IV rank is, it has come down a little bit compared to where we have been over the last couple of months. IV rank is still on the higher side. However, I'd look for potentially better opportunities. If I'm being honest, I probably wouldn't actually put this trade on, although it looks okay. And if you did put this trade on, I don't think you'd be going wrong per se. However, I think that we could probably find some better opportunities somewhere else. So just whilst we are on that topic of looking at different positions, one thing you want to keep in mind is you want to be managing the size of your positions accordingly. So the way that we do that is by using this position sizing template that we've got. If you want to get yourself a copy of this, just drop me a message in our Discord group. So the way that it works is you put in the size of your portfolio. So let's say you've got a $75,000 portfolio, and then let's say the VIX is currently at 21.72. Everything below will then be automatically calculated for you, and you can use this as a guide on how to structure your portfolio. It will tell you how you need to split your portfolio from low risk stuff to short premium stuff, and then it will go further and tell you how to allocate your short premium split into either defined or undefined risk positions. Everything you need is basically on this spreadsheet here, and where you can get that is inside EDS Premium. What is EDS Premium? It's a Discord, it's a private Discord group where you can follow all of our trades. We do manage multiple accounts, small and large accounts, so you will have access to all of the positions that we put on there, so you can copy our trades. Whilst you're doing that, you will have access to our full course. In the full course, you're not required to have any prior knowledge, and we'll teach you everything that you need to know, so you can learn and earn at the same time. And then, of course, if you have any questions, you can ask myself directly or other members that are in who are all on the same path as yourself. There is a 100% money back guarantee. So once you followed our course and our trades for a full 6 months, if you haven't seen results, then we'll work with you for free until you do, or you can request a full refund. So it's completely risk-free. And right now it's £1 a month. The price will be increasing for every 5 members that join. Whichever price you get in at, that's the price you're locked in at. So if you get in at £1 a month, no matter how high the price increases, you will only ever have to pay £1 a month, unless if you were to cancel and then resubscribe at some point in the future. So a link to this will be in the description, launchpass.com/EDS/premium. Before we end the video, we're just going to take a look at some positions that we have on currently. So we can see here we have a position on Euro futures. We put that on yesterday. It's a longer term position. We've got 100 days left till expiration on that, so we're not worried about the Euro. We've got AMD. We're not really too worried about AMD. It's an iron condor. I'm not surprised that we are slightly in the red. Data decay isn't as aggressive when you do have the long contracts covering the short contracts. CMG, we are up a little bit on the day. However, we are still down overall on the position. So if you just have a look at that position, as we can see here, we did start to move towards the short call, and that is why the position is slightly in the red here. However, fortunately today market seems to be coming back down, so we can hopefully the deltas of these contracts will balance themselves back out. But other than that, with CMG, there's not really any cause for concern there. GLD is moving nicely in our favor. GLD pretty much hasn't moved. Volatility seems to be coming down. GLD is perfect. Intel, again, around break even. Southwest Airlines, we've only just put this position on a couple of days ago. And everything else is SMH, UAL, everything's basically a break even. All we need to do in this portfolio right now, which is a small portfolio, is we just need to let the Greeks crack on and do what they need to do. We need to let volatility contract. We need to let theta decay, the value of the contracts. And that's basically it. And that's going to be it for this video. I hope you learned a lot. Like I say, the EDS Premium link will be in the description, and I'll see you on the inside.